Bitcoin, the underlying asset, is impossible to finance, takes a year to buy, it requires an extreme amount of systems reconstruction, and it causes everyone that you work for to be worried. Like, they're all going to worry, well, what if you buy the Bitcoin and you wire it out to your own wallet, and what if you lose it? And so there's a lot of headaches. It's just not going to happen. And if it does happen, you can't borrow against it. But the spot Bitcoin ETF means I can have the same thing in one day for free. And then if it doubles or triples in value, I've got $30 million of Bitcoin. I can go borrow $15 million against the Bitcoin. I've already got the loan agreement. I've already got the best credit terms. I've got 50 basis point credit spread. So you see, one of these things is plugged into Wall Street. And the other thing is for the pioneers, right? The early adopters that want to take the arrows in their back. And the benefit you get by being an early adopter is you get in before it 10x's. Like, what'll happen is at some point, Bitcoin will be 250,000 and it'll be really easy to buy, and it'll be not scary, and it'll be easy to borrow against for it. And if you went to the trouble to get the crypto exchange account and to work through all those other things, you got to buy it for 10,000 or 5,000 or 15 or 20 or 30,000. Those will all look good.
The cryptocurrency market took a dip, with Bitcoin slipping below $25,900. Ethereum also had a rough day, falling below $1,650. The big concern is Bitcoin's approaching death cross, where its 50-day simple moving average SMA could dip below its 200-day SMA, a bearish sign according to CoinDCX Research Team. The world of cryptocurrency exchange-traded funds, ETFs, is heating up, and a significant development is on the horizon. The U.S. Securities and Exchange Commission, SEC, is currently evaluating the possibility of approving the first-ever spot Bitcoin ETF. Expected to debut by early 2024, his spot ETFs could bring a wave of disruption to the cryptocurrency ETF landscape. Presently, most U.S. fund investors gain exposure to cryptocurrencies through products linked to Bitcoin futures contracts. While these futures-based ETFs made a splash when they launched in October 2021, their momentum has since slowed and their collective market value has stabilized at around $1 billion. Enter the spot ETFs, which many believe could offer a superior product. These ETFs are expected to track Bitcoin's price in real time and potentially come with lower costs compared to their futures-based counterparts. This shift could attract new investments, particularly from those looking to hold cryptocurrency over longer periods. With more efficient pricing and lower fees, spot ETFs could soon become the go-to choice for cryptocurrency investors. However, this potential shift isn't without its challenges. As the cryptocurrency ETF landscape becomes increasingly competitive, issuers are likely to engage in fee wars, aiming to provide investors with the best value. This development could also lead to a redistribution of trading activity and liquidity, potentially away from U.S. Bitcoin futures markets. So, as the cryptocurrency world continues to evolve, keep an eye out for these exciting changes in the ETF space. Let's continue our discussion with Michael Saylor.
I don't think there's a big overhang of Bitcoin. What's going to happen is, as soon as Grayscale can convert, then if I know that they're able to arbitrage it, then I'm immediately going to buy up all the shares in Grayscale to do it myself. One of the things that happens in the free market is there are all these hedge funds that have billions and billions of dollars. Once they know that the discount is going to go to parity, then they would begin to buy up the shares and arb that out. And as soon as they did that for 5% of that amount, it would snap the discount back into place. So I think that, for example, everyone that owns Grayscale, they're not going to want to sell if they know that the discount is going from minus 20 to 20% to zero. They're not going to sell. And then anybody that might want to buy is going to buy in a hurry, right? And so what happens is, once you've cured the structural deficiency, the discount will go away, and then there's no incentive to sell the Bitcoin. The people that are in the space wanted to own the Bitcoin. They didn't want to sell it. So I think there'll be a very, very quick short-term adjustment, maybe a jolt. Sometimes in the crypto markets, there's this panic that lasts for like an hour or sometimes for a day. And then people all go, oh, what did I do? That was stupid. Like when Jerome Powell starts talking, about interest rates, and then the price crashes, and then the price soars and then it comes back in. So I think there might be a little bit of adjustment, but at the end of the day, curing the structural deficiency will cause the discount to go away. So that's what I think on that. With regard to the other spot ETFs, I think it's highly likely they all get approved at the same time. And you know, if not at the same time, if not like in the same press release, in the same week. I don't think that you'll see Grayscale approved and all the other spots delayed. The SEC has enough tools at their disposal that they can manage the sequencing of all these things to either approve everything or delay everything or slow something down and speed something up. So I'm as you can probably guess, I actually think the future is good for Bitcoin. I think it's undervalued. There's never-ending number of people on Twitter that come up with scenarios for me, figure out why you would, but they keep coming up with them, and it's always, you know, it's always some crypto FUD, right? This exchange might melt down, that stable coin might melt down, maybe the regulators will do this, maybe GBTC will crash. But I don't think any of those things are anything more than maybe they scare you for an hour or a day. But if my holding time was a year, then I would just ignore all the noise. And of course, my holding time's more than a decade. So I think there's only 3 things that are relevant right now. Right. And here are the 3 things. The halving is coming with 100% certainty. And as far as I can see, most of the selling of Bitcoin in the market is the Bitcoin miners that have to sell in order to pay their electricity bills and pay their debt expenses and their operating expenses. So that amount of selling pressure is going to be cut in half in a few months. So we know that's coming. And then we know there's a spot Bitcoin ETF coming. And when that comes, we plug into Wall Street and the entire banking system. And then finally, we know that fair value accounting is coming. And when that happens, the objective will go away. And now you're going to introduce this as a conversation into hundreds of boardrooms. They will not move in a week. They move quarterly, but over the course of 12 quarters, you know, you'll start to see company after company looking at this, and you'll start to see a reallocation of assets. Right? At the end of the day, corporations only hold 2 assets. They hold cash and they hold bonds. And so if Bitcoin is available as an asset, pari passu to a bond, then you'll see a reallocation from bonds to Bitcoin. And then in the institutional investor side, you've got all these people holding real estate, holding commodities, holding gold, holding ETFs and S&P indexes, and the like. And if they start to reallocate, and they will, 1%, then 2%, then 5%, then you're going to have something that's never happened in the history of the world, which is you've got an ETF on a commodity that is scarce. Every other ETF in the world is on an asset that is not scarce. It's inflationary. You can make more buildings, you can make more real estate, you can make more gold, you can make more commodities, you can make $1 billion worth of any of those things. The underlying producers produce more of the asset to deflate or to depreciate the price. With Bitcoin, when $100 billion flows into the Bitcoin spot ETF, there won't be any ability for any producer to produce any more Bitcoin.
And that concludes an insightful episode of Money TL Case. If you enjoyed the video, don't forget to give it a thumbs up and subscribe to our channel for more daily updates. Remember, knowledge is power, and we're here to empower you on your financial journey. Until next time, happy investing.